Investment banking and shoes, of all things, is what we're going to talk about with Todd Bunton. He's our growth and income stock strategist here at Zacks.com. That's a wild combination,
Yeah.
let me tell you. Let's take the investment banking first. You want to highlight Evercore Partners here.
Yeah, Evercore Partners, they're a boutique investment bank, not the big household name like a Goldman Sachs or a JP Morgan,
Right.
But definitely a growing investment bank. Obviously, just like other investment banks, they provide services to multinational corporations, like services with mergers and acquisitions, divestitures, restructurings, other strategic corporate transactions that they'll deal with. But they also have an investment management arm with about $12 billion in assets under management.
Oh.
That's a growing business for them too. They're founded in 1996, a market cap of $1.1 billion. They have offices across the U.S., a couple international. But definitely a good growth story here, and that was on display last quarter. And in January, they reported a huge fourth quarter positive earnings surprise, beat the Zacks consensus estimate by 56%. That was driven by exceptionally strong revenue growth, 90% in fact, year over year. Operating income was up 191% year over year. And what really was driving that is an improved M&A environment for investment banks as the economy continues to slowly improve. Companies are the M&A activity is starting to pick up a little bit, and Evercore is definitely benefiting from that. But they're also taking market share from their competitors, and that's led
That's
to
a good thing.
Yeah, obviously, and that's led analysts to revise their estimates significantly higher for both this year and next year. If you look at consensus estimates, analysts expect 24% earnings per share growth this year and 25% growth next year. So a good growth story here. Like I said, they're smaller, they're a boutique with a lot of room to grow and keep taking market share from the big boys. Not only that, they pay a dividend that yields 2.3%. And since 2007, they've increased that at a 13% compound annual rate. So good income to go along with that growth. You're getting all that at a reasonable price. They trade about 17 times forward earnings. Historically, they trade at 15 times, but considering the growth here and the income, I think that's a reasonable valuation.
Okay. Speaking of those shoes, Foot Locker, FL the ticker. Now, there's a name that a lot of people will know.
Yeah, very familiar name. They have a presence here in the U.S. and also in Europe, of all places.
Wow.
And they've actually focused on closing some stores here in the U.S., the more unprofitable stores, and actually growing in Europe. They have over 3,300 stores across the globe. They also own the Champ Sports line, too. That's, I think, a little over 500 stores. But since they've focused on store closures, they've seen their operating margins expand greatly. Not only that, they delivered solid same-store sales growth, too. So along with that, you've gotten big earnings per share growth over the last few years, and, of course, a string of 11 consecutive positive earnings surprises. And that's really been the story here. If you take a look at their price and consensus chart, which plots consensus estimates along with the share price, you can see a high correlation, obviously, between rising earnings estimates and a rising stock price. And you can see just consistent, steady beats and raises. It's happened the 11 consecutive quarters. And analysts expect continued growth for this company over the next couple of years. If you look at consensus estimates, they project 40% earnings per share growth this year, 11% growth next year. And again, that's coming on a focus of they're not so much focused on closing stores in the U.S. now. They've kind of stopped that, but they want to increase their presence in Europe, and they want to drive more apparel business too. Apparel makes up about 25% of their business. So we all know them for their shoes, but they want to grow that apparel line. Also focused on women's brands. They open a new concept there. So a good growth story here, good income story as well, or I wouldn't be talking about it. They pay a dividend that yields 2.1%. Over the last 10 years, they've increased that at a 20% compound annual rate.
Cool.
So very solid income, and all that at a very reasonable price. They trade about 12 times forward earnings. Historically, they trade at 14 times. So there's a lot to like here, especially on the valuation side. When you combine it with the growth and the income, could be strong total return potential here.
Own either one?
I do not.
All right. Check out other stock picks like our Bull and Bear of the Day and stock picking strategies on our website, Zacks.com. Link to all of that right off the homepage. With Todd, I'm Terry Ruffalo.